Welcome back to the channel. I hope you're having a great day wherever you are around this beautiful planet of ours. Today, we're looking at specific key levels for a flip to occur on BTC while the rest of the media is calling for, you heard it, sub 10K BTC. Of course, we're not in the clear just yet, but we have been putting in a low at around 15.5K and the market is starting to climb out of this war zone. The other thing we're looking at is a potential pullback on the S&P. We've got lines to be holding here to continue with the macro setup, but of course there is going to be some fear being spread into the market should we see a breakdown of this zone. The other thing we've been covering is the collapse in the US dollar since putting in this significant high back in late September. This is now 2 months on. We have confirmed that this is a significant high and a very significant pullback in the US dollar. Bang on time. What we did, calling it here on the channel first. So make sure you are subscribed, bell notification icon, go through and do those monkey things that we all have to do here on YouTube to please the algorithm gods. Check out the previous videos on the channel, full of macro updates here as well. I'll leave a link to them at the end of this video on your left-hand sides. And finally, we got massive Black Friday specials. Along with the massive Black Friday specials, our new website has now launched. Beautiful, brighter, bigger, even better than ever, and a new dashboard that you can use once you become a member. So make sure you subscribe to our newsletter. Link is in the top of the video description. You can find that right over here, and the Black Friday special discount codes will be coming out to your email address very, very soon. All right, guys, let's crack on with the first section of the analysis as we push our way through the macro charts, all of the S&P, we've got the USD, and then some massive changes that have come to CoinMarketCap to help protect user funds. First things first, S&P, the market has head to new recent highs, 4,033 points just in the last 24 hours. This just pushes above the previous high on the 15th of November. But as you can see here, we've got a bit of a rising wedge pattern. Now, this is on the daily chart, so it's not a macro play just yet. The daily chart, sure, it can break down from this zone. Maybe we have another couple of days here, finish out the week slightly higher, and then start to see it roll over. Or of course, we have 2 more days left. Maybe we do start to see it early and we get some specials going on in the S&P as well. But to the downside, regardless of what happens here and the fear that comes out and the news articles that will start to be thrown around, saying that banks are in trouble, this, that, the other, which is what we've been seeing forever, even though the prices are now higher than they were at the first dip in June, second dip in October. We're now much higher than that. The downside levels, should we continue down from that point, holding above 3,600 points is still one of the major keys here. For the 50%, which is actually dynamic at this stage, being that it's a daily chart, that's at 3762. So should this move up a little bit, then we're going to have to readjust the 50% level. But for now, it's sitting at 3,762. So anywhere over the coming weeks, should this market start to fall, still that would still set us up within a relatively strong range to put in a new low. Ideally, we don't want to see it break down from about 3,600 before we reach the target point here in mid-December, which is about 3 weeks away. And the price target is just over the 4,155 points. Call it 4,200 for a nice round number. So within about 3 weeks, we want to see this market go about 150 to 200 points above where it is. If that's the case and we get a pullback from that, things are looking very, very rosy, regardless of what the media is throwing our way. This is a bottom forming that we're looking for. It's basically been in place since the downtrend, but more importantly, this significant low that came in around mid-June and then put in that potentially final low in around mid-October. Essentially, this is what we're seeing as a build-up of a base in the markets. It's all come in relatively good areas for the macro bottom. Thanks to the Apple software here, the video got a little laggy. So the video's off, but that's not going to affect our analysis from this point on. We're looking at the US dollar and the collapse that has continued since this significant high here at the tops late September 2022. If you recall back on the channel, we were looking at the collapse of the US dollar. We've continued to cover this, and this is now definitely confirmed as a significant level to watch. 115 is the key level right now. To the downside, what we want to see for further downside on the US dollar is a close below this particular line here. I'm looking for around 104.5 as a round number. As August put in a low, that's a key level, and we want to see this particular move continue down. However, what I am anticipating is a move to this low level, which is basically the previous low here that was set just a few days ago, and it's also our 50% extension. So it's at about 105.1. But if we do get a bounce from that, then we'll probably see the market start to trend up, but not necessarily right up, maybe just holding out this ground here for a little bit of time before it attempts it again. So that level is going to be key. 105, call it 105.2. Should we break down from that straight away, then we definitely want to see the market close below this level here, 104.7, and then this little yellow one here, 104.5. That's going to give us some good weakness to the US dollar, confirmed macro weakness, and then give some more strength to the other markets that we are following here, obviously the metals and of course cryptocurrencies. Let's test out the camera again for the big news. Now this is CoinMarketCap launching proof of reserve tracker for crypto exchanges. This isn't essentially just the typical ridiculous news that tries to get us into fear or greed or do anything stupid with our money. This is actually looking at proof of reserves for crypto exchanges so that we can now track what money these crypto exchanges have on them. Now, all you got to do is go across to CoinMarketCap and look at any of the exchanges under spot. So exchanges here, and then spot, and then look for this little icon here. So they have their reserve data available. Binance, of course, KuCoin there, Bitfinex, major ones here of the channel Bybit, and also BitGet is working on their proof of reserves as well. Of course, I do talk about them on the channel as they are channel sponsors. So just to let you be aware, they do have massive Black Friday specials and of course FTX crash specials going on over there. Bybit 30,000 and then BitGet nearly $9,000 as well. You will have to deposit funds onto the exchange to get bonuses. They just don't give away 30 grand for free. You know, that would be lovely, but that's basically what you got to do there. And of course, trade on the exchanges, right? So if you're uncomfortable with that, obviously don't go through with it. But just letting you know that a lot of these exchanges, at least I guess the more reputable ones, are throwing on some proof of reserves to let you know that what funds they actually have on the exchanges. OKX is also in there as well. So a really nice feature to see coming through from some of the bigger exchanges there. And I think that has led to a little bump on some of the exchange tokens like BNB. Got right here, we just saw it pump up about 12% overnight. And some of the other exchanges like Curve as well in the DeFi space have also pumped up a little bit. But nonetheless, it might just be a news pump in that regard. So we're not going to focus too much on that for now. The main thing we want to look at here is BTC and the steps that are in progress right now for BTC. So I've got step 1, 2, 3, 4. I want to see some Wyckoff bullish flips, obviously working our way from the small ranges to the macro ranges here for that flip, for Bitcoin to regain some strength, and of course, be done with the $10,000 talk. I'm not sure it's going to get there. And if, of course, there's always an if these particular targets are met, then the probabilities are reduced for the 10K, not only because the price is further away from 10K, but because it's breaking significant resistance levels. And that's really the major key here. If you can identify the resistance levels, at least the major ones that are going to have an effect on pivoting the market from a bear to a bull on the particular time frame that you are worried about, whether it's short-term or long-term, then you're going to be able to make better decisions and line up the probabilities of that next move happening so that you can then adjust your risk on your trades. I hope that's all starting to make sense in terms of how investing and trading works. This is not just a give me a price target and the market has to reach there or not. This is how you start to line up the probabilities of particular prices being met within the time frames like we discussed in yesterday's video, which is a massive key video, and I'll leave a link to it at the end of this one, looking at major time frames and the potential of the Bitcoin bear market, looking at a bottom nearly being done. And we won't know that for the next until the next several months, but at least we start to get a time frame in mind. So before I get too detailed in that, let's cover these levels here. For the micro, 16,600. We get some closes above here that at least sets us up in the micro time frame, more so on the, say, 4-hour chart to hopefully tackle step 2, which is a very big, basically a big step right here because it's above the previous low, which was that June low. So we had that June low come in, very, very significant for this cycle. Getting above 17,600 sets us up very nicely to then tackle, you guessed it, 18,600. So basically $1,000 steps from 16.6, 17.6, 18.6. And of course, step 3 is also extremely important because it was support for the entire period here, which potentially is still an accumulation zone, provided we're able to get back above the previous low over the coming weeks. Probably within the next 2 to 3 weeks, if we can get back above that low, then this could still be an accumulation zone because the area underneath the June low was short-lived. And that's what we want to see very, very soon. So 16.6, step 1, 4-hourly chart. Step 2, probably around the daily to the weekly chart, above 17.6. Step 3, above the 18.6 on the weekly chart. And then step 4, this is probably going to be over the course of weeks to months to get back above my Wyckoff bullish flip bar, which is the peak being 20,675, more so around this 20,700 level, which you guys have been following. You know, it's been a key level on the chart for many, many months now. And this basically is the top of the breakdown bar on the 8th of November, when the market started to go pear-shaped on the 8th and the 9th of November. So 3 key levels in the short term, from the hours to the days and obviously weeks for step 3, and then going to step 4. This is going to be on the bigger term time frame. If we can overcome all these things, then there's much better chance to get over this bar. And you know from the breakdown from these higher levels how important the Wyckoff bullish flip targets are. These bars are essentially wide-ranging bars in comparison to the previous data. Huge volume, low closes, and they basically increase the volatility of the particular move. So if we can overcome that, what we're now doing is overcoming the market sentiment, basically what we had been programmed into from that day based on what the sellers and the buyers were doing in the market. The sellers basically took control on that day. And so what the idea here is, what the theory is, if we can get back above that price, that means we flip what the sellers programmed into the market from this point, and we're now into the bullish state. And this has proven very, very effective, basically throughout history using Wyckoff analysis. But what you guys have seen on the channel, in the short term, all the way from June, we never got back above any of these bullish Wyckoff tops in the chart. You can see here right at the top here, August 19th. And then I had another couple that were playing out earlier as well. This is back here in June. And then if you've been following since May, let me know down below with a nice little love heart or choose your own little emoji there. If you've been watching since May 2021, this was the key level that allowed us to forecast that the market was not going to go above the previous top in April of 65 grand, because we had a breakdown here in April that was at around 60,400. And throughout May of 2021, we were saying on the channel and on other people's channels who follow news, and we're getting people hyped up to buy more altcoins, if the market doesn't go above 60,500, we're probably going to see further downside. It was very, very, very unpopular at the time, but that's the power of these Wyckoff bullish flip bars. If they can't be overcome, you're probably not going to see higher prices. And these are sort of key levels in the market that you need to see the market come back above in order to flip from those bears to the bulls, and vice versa if you're flipping the chart the other way around. Now, you're probably wondering where are some of these levels on other cryptos, and we'll quickly cover Ethereum here. Step 1, around that 1,200 level, and then step 2 at about $1,260 odd. Basically the tops of the daily bars and where the bodies were, which is around 1,280. So if you want to have a bit of a range here of 1,260 to 1,280, that's going to be a key level for ETH to get back above, to then hold ground and start to work its way higher above the bear market downtrend. Of course, that's not met and we start to see a reversal here, then it's most likely that we'll come back and test these lows that have been set over the last couple of weeks at 1,070, and then come back and test the next levels at about $1,000 even. So ETH is still in a little bit of a precarious position here. However, it is on the move with Bitcoin as well. So hopefully in the coming days, probably 2 to 3 days at least, we get back above 1,200 and then work our way that little bit higher, especially if Bitcoin is also doing the same thing. We also saw a bump up on Solana, and I've just given it a few little comments here. Something fun that we can play with, especially while the markets are not the greatest. But in the case of Solana, we're sitting just above the slow grind area. I'm still looking for prices potentially further down at around that $5, which is the previous resistance. Market broke out, so anywhere between 5 and 12. But provided we hold up here, we could be in for a slow grind ranging between the previous lows at around that sort of $19 to $23. That was back in the May drop, and where we currently are at around that $11 to $12. So it could be a bit of a slow grind to work its way out or break down again. So I think Solana's had a little bit of the scare taken out of it. A lot of the fear has been thrown into the market, and it's really just trying to gather again to see whether this is going to be a low and climb higher, or if we are just buying time until we break down again and get into the zone between $5 and $12. Should we get into that zone, that is going to be hodler tears. Absolute dire pain for hodlers anywhere in this zone, because that's basically 98% down all the way up to about 95% down from the all-time high. So hodler tears here, they won't be selling. They'll just say, I'm done with this. It's back of the portfolio and I'll just worry about it. Maybe one day I'd be an ETH killer. I'd say anything under this level here of $5 back into the previous zone, you can basically kiss your ETH killer goodbye for the for the medium term, potentially even longer term, until it can recover out of this zone of $5, if, of course, it gets there. As for the upside, we get a nice bounce from here in the slow grind and above the previous drop, a level of around $25, healthy recovery. All bets are off. You can keep bragging on that Solana could be an ETH killer, but for now, it's in the slow grind with the possibility of still breaking down further because the trend is down for SOL. So that's a look at the major steps for BTC following on from our major macro update here, looking at the lows, what's going on in the US dollar. Of course, this is playing pretty key roles here. None of the views have changed thus far. Nothing in the market is telling us that things need to collapse and the world's coming to an end yet again, as they've been calling for all year now. But basically, everything is holding up as we're expecting, and potential for pullbacks within the bigger picture of accumulation over these markets. I hope you enjoyed that, guys. Make sure to check out the videos popping up here. Black Friday specials are on. Get your email address in here right now. And of course, those massive bonuses down below. Check out the new website. Got the links down below. Absolutely amazing. And I'll see you guys at the next video. Like, subscribe, bell notification. Until then, peace out.